Good morning, everyone. Welcome to this webinar regarding the Colorado Secure Savings Program and FAMLI programs, which are new for all Colorado employers for 2023. We hope to be able to provide some good information and encourage you to participate in Q&A for this program. We do have folks from both the Colorado Secure Savings Program and the Family and Medical Leave Insurance Program with us today. And I'll start with a few introductions and I'll let them take the program from there. Before I make the intros, though, if you do want to participate in the Q&A, and all the participants are, your cameras are off and you're muted, so we're not going to have any live Q&A where people have to turn on their cameras or microphones. We'll do all that through the Q&A feature. And if you're new to Zoom, if you roll your cursor down to the bottom of the screen, you should see a toolbar that pops up, and there should be a box that says Q&A. That's where you would click on there and then submit your question to the panelists as we go through the program. And then I'll leave it up to the folks from CSSP and FAMLI to monitor those Q&As and key those up for their folks. And certainly at the end of the program, we'll leave some time to take any Q&A at that time as well. But to get started, let me introduce the two primary folks that I've been working with to get this program organized, and I sure appreciate all the time that they've spent putting this together. The first is Daniela Libovici. I hope I did that really well, or I might have done that really bad. But anyway, Daniela is with the Colorado Secure Savings Program. She's a multilingual marketing and outreach specialist for the CSSP program and has been working on this program for a year and a half, probably from the time it very well got started, and is here. Daniela, I think you've been making presentations all over the state. I met you in Estes Park earlier this year in a heavy snowstorm, and I still respect the fact that you drove all the way from Denver to attend that program when half the folks in Estes felt like they were snowed in and couldn't make the meeting. So I admire your bravery for that. Formerly, before working with the Secure Savings Program, Daniela worked with Boulder County. The other person that's going to help us on this program is Michelle Berry from the Family and Medical Leave Insurance Program through the Colorado Department of Labor and Employment. Michelle is a communication specialist with that group, and she has arranged for several members of her team to participate in this program today. So we basically flipped the coin, and we decided that Daniela and Colorado Secure Savings Program would be the first group to present. And then Daniela, when you're through, I'll let you hand over the baton to Michelle. Now, what we'll do is when Daniela is done with her particular part of the program, we will pause in case there's some Q&A specifically for CSSP that has come up during her presentation or at the end of her presentation. We'll just take a little bit of a pause and make sure we cover those items, and then we'll launch in with Michelle and her team for the rest of the program. So with that, ladies, I'm going to turn off my camera. I'm going to mute my headset, but I will be here. I may run upstairs and get more coffee, but I will be here for the duration and look forward to the information that you're going to share with all of us. And thank you for joining this morning.
Thank you so much. I just wanted to also give a shout out to Darius. He's our new outreach specialist on board. We're very excited to have him, and he'll be doing future presentations. I gave him my login, but his name is Darius. So we're very excited to have him on board. And I will share my screen so you can all see the presentation. Okay. Hopefully everybody can see that. All right, we will dive into what the Colorado Secure Savings Program is all about. So it's a newer program, as Paul mentioned, and thank you so much, Paul, for organizing this. It was wonderful to meet you up at Estes Park. What a cool location to present at. And now we are going to dive into why the program is needed. So basically, in 2019, the Colorado Treasury looked at different options to help close the retirement gap in the state, and they set up a board through the governor's office that basically founded the Colorado Secure Savings Program. And our board is made up of 9 people. And then they did a research on best ways to close the retirement gap, and they thought that this program would be really helpful for business owners. Also in 2020, they ended up passing the legislation, and I'd be happy to go into that. So basically, 40% of our state employers and employees don't have a retirement program at work. So this is the private sector workers. They don't have at all a retirement program at work. So as this says, it's nearly 940,000 workers. And, we wanted to do something about that to help more employers provide that option at work. This is going to be a problem in the future because it's going to be costing taxpayers, and it's more a problem down the road because our economy is relying on more people to retire in the future. So we definitely want people to start saving early. And what's going on right now is that there is less options for pension plans in the workforce. So that's mostly for like the public workers, the public sector workers like teachers. They have more of that option, but they're becoming less popular nowadays. And with Social Security not covering people's monthly incomes, that's about $1,500 a month paycheck. People are going to need to save more once they become of retirement age, because they won't be able to sustain the same savings that they're doing now when they have a job. So we just want to create awareness too, and definitely want to touch on the financial education piece of retirement down the road. So we basically broke this down into who does this program serve. So if you have your business and you have 5 or more employees and you've been in business for 2 or more years, the Colorado Secure Savings program and law requirement is to you. So we can go into what constitutes as 5 or more employees. I usually get a lot of questions regarding that. Happy to cover that in today's presentation and go into why this is needed. So since it is a law we passed in 2020 in the state of Colorado, all business owners with 5 or more employees, as mentioned, and have been in business for 2 or more years will be required to have a program, retirement plan or program. So this is the ones that are covered. Like if you have already one of these plans for retirement, you're good. You don't need to worry about our law. We also send flyers in the mail. We should be wrapping up the smaller amount of business owners this summer, notifying them. Hopefully we can do another round of notifications, but basically we tell folks if they didn't get a flyer in the mail, they don't need to worry about our program. We're working in partnership with the Department of Employment and Labor to kind of figure out who's part of the 5 or more employees and which businesses have been in business in Colorado for 2 or more years. So if you didn't get a flyer from the Treasury office, this is more of an informative information for you. We can continue talking about this. Was our waves of registration. As you see, we're past the June 30th deadline of notifying the smaller employees. We do have these written on our website, but enforcement won't start until February of 2024. So basically, business owners don't need to fully worry until February of 2024. That's when the Treasury will look at penalties for business owners that aren't complying with the law. It would be $100 per employee, capped at $5,000. Of course, the state wants to work with business owners. That's why we gave a 1.5 years notice ahead of time. We want to help business owners. This is to help provide a new added benefit. So this isn't to hurt anybody. So what exactly is the Colorado Secure Savings Program? It is a Roth IRA. So it's like any normal Roth IRAs, the normal Roth IRA rules of withdrawal apply. Until retirement age, you can't take out your gains, only the money that you have put in, which is nice for emergencies as well if people need it. It's automatically enrolls the employees. So once your employer wants to go with our option, of course, it's not required. We just want business owners to save. So there's lots of flexibility. They can either go with our retirement program or they can choose their own 401k private plan. The state is very flexible. This is also positive news for the private 401k options because they've seen an increase in more plans because of our law. So it's really helping people save more. It's a public-private partnership, meaning that we are not in charge of people's money. We hired a vendor. We went through the vendor process. We selected them. Our system administrator is Vestwell. They have offices in New York. They know more about finance, and they're the ones in charge of like helping with onboarding business owners. We did the pilot program back in October last year where a lot of business owners tested out the system and helped us give feedback. So we're hoping that now the website and everything is running more smoothly. They also have a customer service line. So if you have more of the admin questions, I would direct to our website, which I can post in the chat at the end. And it's really nice way for people to start saving. So what's basically happening is that the Secure Savings Program, we are not a match. So like no cost to the business owner. That's the difference between other retirement programs and ours. They wanted to take away the fiduciary responsibility of the business owner. So there's no match, and employers can't put in a match because that's how the state legislature law was written. But it helps ease the burden of the fees that perhaps other private options have. So our program is free to the employer. So they put in 5% of the employee paycheck every month will go to their retirement savings. So this is completely run by the employee paycheck. They can also opt out. So the only requirement is for a business owner with 5 or more employees to notify their employees about a retirement program. And at that time, the employee, they can do whatever they want with their money, which is where, it comes in what they want. It's their savings. It's a Roth IRA as mentioned. So they can take the default 5% contribution. They can lower it to 3% or 1%. We've had other states like California and Oregon. They had this program prior to us, and they've seen folks making $40K a year just put in $100 a month and see that money grow, which I'm sure Paul knows better to explain compound interest. But the more you save, the longer it's in, the more savings you'll have down the road. That's why we're trying to educate people to save early. But of course, the employee, we understand life happens. They can opt out at any time. So that's where the employer fulfills their requirement if they just notify their employee of the program or a retirement plan of their own. And then at that time, the employee can do what they want and opt out if they so choose. It's really easy if you do go with our state program. This is our website, coloradosecuresavings.com. I can post it again in the chat. Basically, there's just 3 steps for the business owner. They can register their business onto our website there. Then they help set up with payroll, whether you have an HR person or the director of the company does it. You upload all that information, and then you update it monthly with payroll. So there's just 3 easy steps. The pilot participants we've seen, they've been able to register for our program 5 to 10 minutes. It was very quick, especially if you have an Excel with all your employee information on there, you can just upload it. We don't see that. It's a very confidential program. So people with a TIN number, they can enroll in our program. So we're very flexible with the bilingual aspect. We can also do presentations in Spanish. So we're trying to accommodate to folks that haven't been able to enroll in a retirement program prior to this. This talks about what I mentioned earlier, the difference between the saver and the employer. As mentioned, there's no fees for the employer because there's no match. There is a $22 account fee for the saver annually, but that's just like the normal Roth IRA rules. Like other Roth IRAs would have that as well. And you know, the IRS did increase the contributions to $6,500. So savers can save up to that amount annually. And we talked about the employer not being able to match. That is the fiduciary responsibility that we don't want to place on the business owner. And then the employer can't really give retirement advice. Of course, they can call our investment manager, State Street. The employees can get all their financial information there. They have both call centers there as well. But if the employee just automatically enrolls in our program, it is a target date fund. You know, the first 30 days, it's like a money market. Where, what does that mean? It means that your money is just hold for 30 days in case the employee doesn't want to participate. They can opt out and then they get their money back, or they can continue with our program and then they would see that 5% default and it would be a target date fund. But they can also change the investment option if they so choose to. As mentioned, we did send out flyers. So this is just reminding people that if they didn't get a flyer in the mail, they don't need to worry about our program. And they can also email me if they have more questions. This is the 30 days, what happens to your money, basically in the money market, and then the opt-out option. And 5% is the default. Of course, it can go up to 8%. The employee can change that at any time. And this talks also about the other investment options. So as mentioned, the default is the target date fund, but we also have the fixed income fund and the global equity and the money market. The global equity is run by BlackRock. All the other ones are run by State Street. So people also ask if they have less than 5 employees. Obviously, it's not required to them. Let's say I have a jewelry store and it's just me and another person working there. We're only 2. This doesn't apply to us, but we don't have a retirement program at work. And we think this is a cool option. You can voluntarily opt into our program. So any self-employer or, you know, small business owner that hasn't been able to save before, they can opt in. The only difference is like the employer doesn't manage the accounts or the enrollment. You as the employee can go to our website and just sign up for this Roth IRA. So it's a neat way for people to start saving early. It's also portable. So if I work at a coffee shop and then I change to go work at a brewery, that retirement program stays with me because it's a Roth IRA. So it's mine. It can go wherever I move, even out of state. I can continue contributing to it. So that's really nice. And then this talks more about the voluntary options. So the 1099 workers don't apply to the requirement, but they can opt in, especially self-employers like seasonal employees, also like ski workers in the ski towns. They can opt into our program, or any like seasonal like summer jobs, they can opt in as well. The requirement is 18 years or older. So they want people to start saving then. And we also define 5 full-time employees if you've put in 180 days or more. So you have a business and you have some part-time workers. If they're putting in less than 180 days to your business, then they don't count as like the 5 required. Of course, they can opt in voluntarily to our program, but a lot of questions I get is like, what constitutes as the 5 or more employees? And we just say it's 180 days or more in a calendar year. So just tracking that. And this just reminds folks what it's a snippet of our website where the savers can access their accounts. We think it's simple to use. We have a call center if need be. We also have bilingual because we want to help folks that are also speaking other language in this state. We also even have French. Festival is amazing. They're our system administrator and they try to like have the call center less than 90-second wait, so people can get advice quickly about retirement. Just want a reminder that it's not required to do our program. We just want business owners to start providing retirement programs to employees. Penalties won't start till February 28th of 2024. There's no fees to the employer because there's no match. It is auto-enrolled once the employer enrolls all their employees. So if employees want to opt out, they got to do that. Call the call center or talk to their business owners. And the program is officially launched, so you can read all about it on our website. And then however Paul would like, we can either open up to questions or the next presentation, and I'll do my best to continue helping people understand this. And I'm happy to also put my email in the chat as well. So I'll stop sharing my screen.
Great. Daniela, thank you very much with that overview. I haven't seen any questions pop up in the Q&A box from our participants, but I did have a couple of questions that have come up that we've fielded from our clients, and so maybe these are questions that other folks have on their mind as well. So a company that does have a retirement plan, do they still need to register with the Colorado Secure Savings Program, or are they just they just don't have to do anything?
Yeah, so if you already have a plan, you don't have to register at all with us. We try to exempt all the business owners who already are providing a plan. So if there's already a plan in use, we opted them out. So that's perhaps why they haven't gotten a flyer. And also, if we missed you and we said that you need to provide one and you already have one, you can put in your exemption information on our website. So we try to already do all that work already.
Great. So you mentioned those deadlines early in the program about when people needed to register, and that last one was June 30th. It was only like 2 weeks ago for companies that had 5 or more. Let's say we have an employer that this is the first time they're hearing about Colorado Secure Savings Program, and they do have 5 or more employees.
Yeah.
What should they be doing right now?
What they can be doing is researching what they want to do first. Either they want to go with our state option or their own private program or plan, they can do so. They have till February of 2024. Really, that's the hard deadline to prove to the state that they're giving their employees a retirement program. But they have that flexibility right now to talk to folks like Paul or folks that are in finance about their options, and then just decide how they want to continue, whether it's our state program or a private one. We just want people to start saving.
Okay. And then another question that came up recently in our office, a lot of our small business clients do have their kids working in the business. And so we did field that question about, well, do the kids count towards that 5 or more head count? Or just what's the, and do the owners that are receiving wages, how do those, say for instance, it's an S Corp owner with a couple of kids working in the business, how do they go about counting themselves towards that 5 or more head count?
Right. Thanks for that question. That's a good one. So I did talk to my boss about it. And if you have kids under 18, they don't count as the 5 employees, because our Roth IRA rules are you have to be 18 or older to have one in our program. So they wouldn't count towards the 5. And if you're a business owner and you kind of work for your own business, but you mostly have other people working for you, if you're not putting in more than 180 days towards that business, then you don't count as well. It's really that's the easiest way to like figure that out, is if you're putting in 180 days or more. We don't do it by hours. I don't know, they chose it by days.
Okay.
So that's how the state is looking at it. But they're really flexible, as I said, and the employees can control their own money, so they can increase funds, decrease funds, or opt out.
Great. Okay. Thank you so much. Stand
Thank you.
by. There might be more questions later
Definitely.
on. So Michelle, we'll turn it over to you and let you run with FAMLI.
All righty, thank you. My name is Michelle Berry. I'm a communication strategist with the Family Division with the Colorado Department of Labor. And today I have joining me Tracy Marshall, who is the Family Division Director, and David Gallivan, who is the Compliance and Appeals Branch Manager, along with Kristen Nichols, who's a communication strategist with me, and Jessica Smith, who is the communications manager for the Family Division. So today we're going to start with a presentation for you, and I'm going to share my screen. And so there, you should be able to see it. And I am going to turn it over to let Tracy start.
Thank you so much, Michelle. Good morning, everyone. And thank you so much for inviting the Department of Labor to talk with you today. As Michelle said, I'm Tracy Marshall, and I'm heading up the new Family and Medical Leave Insurance Division here at CDLE. And we are going to be going over the basics of the new division with you. We'll take some time to answer some common questions that we're hearing about the program. And obviously, we also want to make sure we can get your feedback on the work that we've done so far and the work that's still to come in the future. As you can see on this agenda slide, we've got several topics that we'll be covering today, including our timeline, how we're funded, and all those questions about calculating that employee headcount, which I know is a very popular question amongst this group. We'll also look at the rules for those that are self-employed or have an S-Corp, and we'll also be providing you with a whole lot of information that you can take back to your teams as an employer. So starting off with a quick overview of the program. So what is FAMLI? So FAMLI will be providing paid leave for Colorado workers to take care of themselves and their loved ones during certain life events. And that could be the addition of a child to their family, whether that's through childbirth, foster placement, adoption, emergency placement. It could also cover almost all workers in Colorado, including minors and including those who are self-employed if they wish to participate. The FAMLI program is a social insurance program, so both employers and employees contribute to the fund that will eventually be paying out these benefits. The premiums are set currently to 0.9% of the employee's wage, with half of that being paid by the employer and half of that being paid by the employee. That premium rate of 0.9% is set through the end of 2024. And then from 2025 and beyond, we will be taking a look at the fund. We'll be looking at the fund's health, and we'll be setting the premium rate according to the monetary value of that fund. We are capped by the statute to ensure that we never go above 1.2% with that premium rate. Here's our timeline. This shows you where we're currently sitting on the work that's being done for you. So as you may be aware, the premium payments shared between employers and employees already began at the start of this year, and we have begun to build out that fund that will eventually pay out benefits starting on January 1st. We're already past the second quarter of the year, which is shocking for me to even think about sometimes. But coming up here in a couple of weeks, all of our businesses will need to submit their wage reports and premiums for quarter two. You want to have those in by the 31st of this month to ensure that you're not subject to any late fees or penalties. Next month, we'll be launching an online portal for our healthcare providers. They will be called on to verify claims, so we have built out a dedicated system for them to help them manage all the patients in their care who are needing family benefits. In October, there's a deadline to make sure you submit any applications for a private plan if you're choosing to go in that direction, and you still wish to receive a refund for any premiums that you may have already paid to FAMLI to date. And we'll get more into that later. At the end of the year, we'll be opening applications for workers who want to be able to use the benefit when it becomes available in January of 2024. So think about those people who know that they will be needing to take that leave beginning on January 1st. Perhaps that's for bonding or for childbirth or for a pre-scheduled surgical procedure such as a knee replacement. Next slide. As I mentioned earlier, FAMLI is a voter-approved initiative that is funded by both employers and employees. Employers with 9 or fewer employees are not required to pay the employer share of the premium. You will only have to deduct and remit to the state that 0.45% employee premium from your workers on a quarterly basis. Employers that have 10 or more employees are sharing in the cost by matching that 0.45% premium. Employers can choose, if they wish, to cover the employee's portion as an additional perk, but there's certainly no requirement for them to do that. Every employer, regardless of size, is required to register with the FAMLI division. Also, as we mentioned, be aware there is no age minimum for workers to pay premiums and receive benefits. Workers of any age owe the premiums and they can receive the benefits. And again, self-employed individuals may voluntarily participate in the program. They would only pay that 0.45% premium, and they would be able to receive the full amount of benefits should they need to utilize it. And with that, I will hand you over to David.
All right, thank you. So, Tracy was just telling you that your premium amount can be based on how many employees you have. And so we get that question a lot of, how do we count employees? It should be easy, right? You line up your employees 1, 2, 3, 4, maybe have them count for you if you're bad at math like I am. But there is a little bit of a wrinkle here because your employment numbers might change through the year. So we count the employees once a year. It's at the end of the year when you put in your quarter 4 wage reports. And what we look at is we count anybody who did any work during a week for 20 or more calendar work weeks. So if you have somebody who comes in every Thursday for 21 weeks, they count as an employee. If you have somebody who comes in Monday through Friday, but they're only there for 16 weeks, then they don't count as an employee. And on the next slide, we've got this handy dandy little chart to help you keep track of that. So these are seasonal workers, or at least our first 2 examples are. And so they both work 20 or more weeks throughout the calendar year. So worker 1 meets the 20-week threshold, even though they weren't working consecutively. And worker 2 meets it, even though this individual sometimes only works, a day or 2 in a week. They don't work full weeks, but both of them count as 20 weeks. So both of them are counted as employees. Let's look at the third worker. The third worker is a full-time employee who was employed for more than 20 weeks. And so they're counted in the total head count. Now, but you look at that calendar there and you realize that this person, they did leave before the end of the year. So even though they left, they still hit that 20 mark, so they're still an employee. But let's say that company replaces them with worker number 4, full-time worker number 2. This is the red box. They were hired to replace the worker. This person was only employed for 19 weeks, so they do not count. But let's say full-time worker number 1 had left that work 3 weeks earlier. Full-time worker 2 starts 2 weeks earlier or a week earlier. Now they both count towards that head count because they both work 20 weeks. But in this situation, full-time worker number 2 does not count. So that's how you count workers. Let's take a look at one of the other big questions we get, which is, what do you do when people are remote? It's 2023. People don't always set foot in the office. I am sitting right now giving you this presentation, not from my very nice office downtown, but from my basement. Why? I don't know. I made a decision this morning. But sometimes people work remotely. And so how do you count them? So here you can see the total number of employees, including those working outside Colorado, is 10 or more. Your employer counts as a big employer. So your company is considered to employ 10 or more, even if less than 10 of those people actually work in Colorado. So that means the employer is responsible for the full premium, that 0.9%. That's 0.45% that can be deducted from wages and 0.45% from the employer. And you got to file wage reports for each of its Colorado employees. Excuse me there. And that's a quarterly report. And as Tracy said, that is due for quarter 2. Your second filing is due by the end of the month. But so if you got 100 employees nationwide, but just 3 folks in Colorado, you're a big employer, you got to file a report. you got to pay that full premium, but only for your 3 Colorado employees. So let's take a look at the next slide and a little bit about what happens if you're a Colorado worker working for an out-of-state company. Again, doesn't matter if the 10 employees are in Colorado. What matters is if the employer has more than 10. That company is then responsible for that full premium. We have more details on this on our website, and we have a nice flow chart on localization, because that's one of the things that come up. You're a Colorado company, you have somebody who maybe works right across, who lives right across the border, but they come into Colorado, or you've got people working remotely. So you can go check out our toolkits and our FAQs on the employer page, and they'll help you figure out when is somebody a Colorado employee. So great flow chart, apply that to your situation. It is very fact specific. So let's then take a look at what the premiums are going to look like and what the benefits are going to look like. So you can see some of the ranges here of what premium deductions look like. Employees are going to receive up to 90% of their wages. So this is a sliding scale. The less somebody makes, and this is all relative to the state average weekly wage. The less somebody makes, the higher percentage of their wages are returned. But you can see up there at kind of the maximum, the highest weekly deduction that anybody's going to have is $13.50. That's because we capped deductions at the Social Security cap. The weekly benefit capped again, and I think this number has actually gone up. I think right now it's a little bit higher than the 1,100 there. Maximum annual benefit, and that can be just a 37%, but you're still going to get something there. Now let's talk a little bit about small businesses. We have some great resources on our webpage. Talked a little bit about what happens if you have 10 or more, but what happens if you have less? Some businesses are too small to owe the employer premiums. So remember, if you've got 10 or more, it's 0.9%. If you have less than 10, it's 0.45%, and you can deduct up to 100% of that from your employee's wages. So large employer, you can deduct 0.45%, you have to pay the other 0.45%. Small employer, only 0.45%, you can deduct, you can pay it on behalf of your employees. It's entirely up to the business. So we don't require businesses with less than 10 to contribute anything on their own. The only thing they're required to do is to pay that 0.55% that's the employee share. And again, you can deduct that entirely from wages. But we do know that paid family leave is a powerful recruitment and retention tool. And so this is going to be something that's going to make employers competitive moving forward. Like, are you paying that employee's percentage? And are you offering this? Are you offering anything else? We do know that there are some businesses out there that are going to use this as a top off. So they can take those family benefits. And remember, for some of those higher paid people, they're only going to get 37% of their wages. You can offer to bring them up to a higher level. So you can use existing programs that you might have in order to raise their benefit, just to be a little bit more competitive in the job space here. It's a business decision. It's available to each and every employer. We don't have a position on it. You're allowed to do it. We want to make sure you know that. That's about as far as we go on that one. But we do have a small business guide on our website. So go to the small business corner and they will be there to help you out. All right. So a question that we still get here occasionally, or it usually comes in framing the question like, well, I'm exempt. And the first response is, you're probably not. The only employers that are really exempt are the federal government, some local governments, so municipalities, special districts, and railroads. You can blame Grover Cleveland for that one. But if you're a private employer, you have to participate. And that doesn't matter, again, also if your employees are all related to you, if you have people who are under 18 working for you, every employer, every employee. So again, the only employers who aren't required to participate are those federal, local governments, and some railroad employers. But you do have an option here, because you don't necessarily have to participate in our program. You can purchase a private plan And we have several insurers who are already approved to offer those plans. They're on our private plan marketplace on our website, or you can self-insure. Now, self-insurance has some requirements. You've got to maintain sufficient money in a separate account. You've got to be able to pay those benefits. It requires approval, but those are some options out there if you want to look at it and if you think you might be able to find a better option than our plan. I would suggest looking at it very closely. If you come into the state system, we handle all of the administration. The only cost you're going to pay is that 0.9% or 0.45%. And you don't have to worry about tracking anything, about evaluating claims. We do all of that work for you. So private plans, more options again on our website. We do have a private plan guide under the employers tab. And there's the link to the approved private plans. There are 6 right now that have been approved. We've got 12 more at the Division of Insurance being currently reviewed. So then let's go ahead and move on. We've got a slide here about S Corps. So we'll talk about that. We get this question a lot. And I'll say it normally comes in the context of an S Corp, but it really applies to every business entity. And the bottom line for us is that we don't really care about the formal business entity, about how the business is organized. But the question that we always get is, I'm an S Corp owner, and underneath the S Corp laws, that means you're actually an employee, you're drawing a W-2. Do you have to participate? What matters is whether your company has employees and whether you are an employee. And that's a complicated question, but the easiest way to think about it is there a boss or someone who directs the work of others? So we have the actual definition there on the slide. If a person's both primarily free from control in the performance of their work, and that work is part of their independent profession or trade, then they're not an employee. So Bob's Plumbing, you're Bob. Truck says Bob's Plumbing. Bob drives to the plumbing job site and decides how to do that work. Bob's not an employee of Bob's Plumbing. Bob is probably the owner. Now, if Paul works for Bob, drives Bob's truck, and Bob tells Paul where to go and what to do, Paul's an employee. So this is a business then that would still have to register. They would still have to file wage reports, but Bob would be able to consider himself an owner and not participate. It would only be for Paul. Now, Bob does have the opportunity to opt in and may want to consider that based on what other safety nets he might have. But that is the general idea here. And so it doesn't matter if you're an S Corp, if you're an LLC. The question is, are you free from direction and control, customarily engaged in independent trade? The answer is yes, then you're probably not an employee for our purposes. So let's talk a little bit then about the, then let me hand this back over to Tracy to talk a little bit about the toolkit.
Thanks, David. So you'll find a lot more resources on our employer page, which Kristen has shared the link for you in the chat. Lots of how-to videos, guides that you're able to download. We have information that you're certainly welcome to include in employee handbooks or any other resources that you may need to utilize. You're certainly welcome to. And then also on the screen here, you can see now our phone number, our email address. We are on all of the social medias, and we're certainly ready, willing, and able to accept your comments, your concerns, and communicate with you. Of note, we do have a public comment hearing on August 1st for some proposed rule changes to the premium rules and local government rules. Those are available on our website, on our family.colorado.gov on the rules page. So if you have any, concerns specific to those rules, you're certainly welcome to participate in the public comment. We do try to mix up the time of those public comment sessions to include as many people as possible. So this one will be a morning public comment session starting at 10:15 a.m. on August 1st. So that is our planned presentation. So Michelle, if there's any questions in the chat that you want to help facilitate, I'll hand over to you.
Thank you, Tracy and David. I also just wanted to give a quick plug for our survey. We have a survey that we're asking people to fill out too, if you'd like to. Kristen will also drop that in the chat as well for us. Let's see about regarding questions. It looks like there was one, actually, it looks like they were all really, the ones that were there were all for the secure Colorado savings plan. So I don't have any questions in there, is there? But I know that Paul had a few questions that he might want to ask as well.
Yeah, sure. And it looks like some of the questions have been answered that were sent in. So those of you that want to click the Q&A box, you can go see the answers that have been asked and answered. I also wanted to make sure, if you haven't clicked on that chat box, if you look down at the bottom, you'll see that Kristen has been super busy the last 15 or 20 minutes populating a whole bunch of information and links in that chat box. So if you haven't looked there, make sure you do open up that chat box before we end the program, and you can probably copy and paste many of those links and do some follow-up yourself after this particular program. So I've just been watching that number grow all during the presentation. In the family program, if an employer initially opted to have the 0.45% withheld from the employee, but let's say they're 6 months in and now they're thinking, you know what, maybe I should pick up the tab for that and just create like an employee benefit program and cover the cost for the employee. Is there anything is that all on the employer's end, or is there any reporting they need to make to the family program that they've now taken that over and they're not withholding it from the employee? How does that, what happens in that type of situation?
David, it looks like you're ready to take that one. Did you want to take that one?
Yeah, so there's no prohibition on that. Either way, the state of Colorado did that for us the opposite way. For the first 2 quarters, they paid the employee contribution, and as of the beginning of July, they did. So they switched that. When you do your reports, you're going to show the deductions, but that's pretty much it, just so we know. So we're going to know if you were deducting or you're not, but that's the only requirement is when you file your reports to accurately report if you're taking that deduction, if you're paying it all, and that's it. But otherwise, yeah, an employer can make that decision to make that switch, as long as you're notifying your employees, letting them know what's going on.
We do have a couple questions in the chat too, so I'm going to go ahead and start with one of those. What if the tax, I think maybe the premiums is what they're asking, has been taken from an employee, but they quit with less than 20 weeks? Will that money be refunded? Tracy, would you like to talk to that one?
I'd be happy to. So the family program is a social insurance fund, and no different than if you bought car insurance and then decided to sell your vehicle, you don't get that insurance money back. It's the same for this program. This is an insurance product, and you're paying the fees into a fund, and they will not be refunded.
Thank you. And then there's another question. David, would you take this one? How does family leave coincide or conflict with short-term disability and or FMLA leave? If an employee is covered under FMLA, will they be able to get family leave after that coverage?
Right. So let's start with FMLA. That is federal job protection. It applies to less employers than Colorado Family does. If you have less than 50 employees, you may have never thought about FMLA, but if you have, you're going to have to think about family. But for those employers who are covered by both, they can run concurrently. So what you really want to do is when somebody comes in and says, hey, I'm going to need to take some leave because I have a serious health condition, or I got to go take care of a family member with a serious health condition, you're required underneath our rules to tell them, hey, you're eligible for family. And that comes with wage replacement benefits. You also want to follow the process if you're covered under FMLA to get that documented and to get them set up on that, because those can run concurrently. Now, if they don't run, if that employee doesn't come and apply for family, there's nothing that stops them from applying for it later from us. So that's why you really want to make sure you're giving that notice and telling the employee, like, hey, go talk to Colorado Family. They have money for you. That motivates people who are taking leave more than anything else. So you want to get them signed up and processed on both of those so they'll run concurrently. Short-term disability, that's an employer-provided program. And that is really how that's going to interact with the family program is up to you and your short-term disability provider. So one of the points behind family is that you can use this to replace some short-term disability to maybe lower your costs while still being able to provide paid leave to your employees. There are some employers who are using that as a form of a top-off program. So you would run it concurrently. So if somebody's eligible for short-term disability, they're eligible for family. You might be able to use those short-term disability benefits to bring somebody up to their full pay. The only requirements on that are that you give notice and you give notice to your employees. So you can modify your short-term disability program however you see fit. That's a benefit that employers provide. We don't take a role in that. And so you can modify and offset that short-term disability based on the family. It doesn't affect what we pay. They're going to come in and regardless of short-term disability, they're going to get their benefits from us. So you can get the cost savings off of that.
And if you want more information about how family interacts with some other benefits, Kristen did drop a link in the chat as well for another presentation. We just had another question come in. Does family apply to part-time employees? Tracy, would you talk about that, please?
It certainly does. Yep. So if you typically work 20 hours per week and you're unable to work those 20 hours per week, you're certainly covered by family and you will get your salary replacement for that part-time status.
Great. Thank you. Paul, did you have any other questions that you wanted to ask the team?
Yeah, I did. And I see we have one participant that raised their hand. So I don't know if they're asking to ask their question live or not. I sent them a chat on that to see if they actually want to have us open up their audio. So I'm waiting to see a reply back from her if she wants to do that. But in the meantime, trying to remember what my question was. Oh, yes. And hopefully you didn't cover this. I think I was paying attention. But anyway, just like with the CSSP program, maybe somebody's on this call and they're like, wow, this is the first time I'm hearing about this. I haven't registered. I haven't done anything. What do they need to do now? And what do they need to do about maybe the taxes that should have been withheld since the first of the year? How do they get caught up, basically?
Tracy, you want to talk to that, please?
Yeah, sure. Basically, what I would say is call us. Let us help you get registered in the system. Let us talk to you a little bit about what you need to do to upload those wage reports that you are missing. The one thing I would say to employers that somehow did miss the memo that this was happening and have not yet been withholding those premiums from their employees, be aware you can't go back and charge them for it now because it's not their error, it's not their misstep, so they cannot be penalized and be asked for a large payment right now. Any discrepancies, any monies that are not have not been received from your employees become the responsibility of the employer. So you really need to get started now and try and get those monies over to us and then start charging them from your employees as quickly as possible.
Great. Well, Paul, are there any other questions?
No, I don't. Yeah, I don't see any questions. The individual that had her hand up came back and said, yes, it looked like her question was not going to be answered, but it did get answered. So she's all good on that. And I don't see any other open questions at this point. Let me just put something up here. Hopefully I'm sharing my screen. I don't know. Am I? Can y'all tell from there?
I'm not seeing it, Paul. No.
Okay. Let's.
I just stopped sharing mine, so then hopefully you can take over.
Yeah. Let me do that again. There we go.
There you go.
Okay. So I want to remind everybody that we have been recording this program and we will be posting it out here shortly to our YouTube channel, which is Have an IPA with a CPA. There's a lot of material out there, a lot of videos that we've posted over the last couple of years on all kinds of business, tax, and financial topics. So I invite you all to take a look at that. And that, if I can figure out how to advance the slide, basically there's a screenshot of what our YouTube channel looks like. So basically, if you just go on Google or any Bing or any of these other browsers and just type in "have an IPA with a CPA," chances are you'll see a link to that YouTube channel. And we'll put this, like I said, we'll put this webinar out there on that, and plus you can see all the other material that we have out there, some short videos on a whole host of topics. So Michelle and Daniela and David and a whole bunch of folks, particularly Kristen, who was populating that chat box like crazy with a ton of resources. Really appreciate you all taking the time today to work with our attendees and share this valuable information. I'm sure there's much more to come, and if anything, I think you've planted some seeds that if folks need to take that next step or do some follow-up or get their questions answered, they know what the next move is for that. So we certainly appreciate all the time and effort that y'all put into this program. And with that, I hope you have a great day, have a great summer. At some point in Colorado, it's going to actually warm up and pretend to be summer. And I think we're getting close to that now. But enjoy your summer, enjoy your time, and best wishes to everyone.
Thank you so much for having us, Paul.
Okay.
Thank you. Bye-bye.
Thank
Bye.
you.
Thank you.
Take care. Bye-bye.